Good afternoon, ladies and gentlemen, and welcome to this afternoon's panel at 4:30, entitled Delivering on the New E&P Imperatives for Developing Economies, which is very timely for the world and especially for India, not least because the International Energy Agency today forecasts that India's energy demand for gas alone could reach 120 BCM per year by 2030. On my esteemed panel today, I have to my left Martin White, the Senior Vice President Asia Pacific of Halliburton, then Pankaj Kalra, the CEO of Essar Oil and Gas Exploration and Production. On his left, we have Rakesh Agiwal, the Chief Policy and Regulatory Officer from Cairn Oil and Gas. Then Ariel Flores, Senior Vice President, Subsurface from the BP Group. And on my far left, Shri Anupam Agarwal, the Director Finance of ONGC Videsh. And I would like to start, please, this session by asking Shri Anupam, how are you seeing the energy landscape in developing nations shaping up in recent times?
Good morning. I think we are seeing it here itself. We had been here, this is the third edition of India Energy Week. And in the first and the second, the way we were talking about, everybody was talking about green energy, renewables. This is the third edition and we are seeing a lot of talk is happening on the core energy. So how the things are shifting, last 3 years, everybody was talking, we have to shift from conventional energy to the new energy, as if it is a on-off kind of thing. You change from the old word to the new word in a day or two. It is not going to happen. That realization has happened. And especially after Russia-Ukraine war, the way the prices of energy shot up, everybody started using more and more of the conventional energy to meet its demand. And the way we see it, we have to see the energy imperatives are different for developed world and developing world. Developed world already is consuming almost 10 times per capita consumption of energy as compared to the developing world. It has reached a stage where they can talk about energy replacement from the conventional to the renewables. But as far as developing countries are concerned, they have aspiration to increase the living standards of its people. In our country itself, we have an ambition to become a Viksit Bharat, developed India by 2047. And that Viksit Bharat means a lot of demand for energy. So there is a realization that we have to use all kind of energy. It is not only renewables, it is all kind of energy. Renewable, whatsoever efforts we are doing, and we are very, very focused on increasing renewable portfolio. But renewable is only able to meet incremental part of demand, and that too only in some portion, not entirely. So conventional energy continues to play its role in a big way, and we are using all kind of energy. The role for developing country is that continue to increase the production of oil and gas, use all kind of energy, but at the same time use it responsibly, reduce the carbon footprint, and at the same time work on the renewables. So this is the new world order which we have seen, and as ONGC Videsh, the kind of discussion we have with our partners, with various countries, this is emerging across. Thank you.
Thank you very much. And if I could turn, please, next to Cairn, to Rakesh. Globally, there has been increased interest in offshore operations. However, this requires huge capital investment. Are Indian companies such as Cairn viewing these offshore projects as viable operations? Viable options? What are your views, please?
First of all, good afternoon to everyone. And offshore operations are expensive. And Cairn has been a kind of from last 30 years we have been into the offshore sector. So we started our journey in India with Rawat and Cambay Basin, and we have the expertise and the experience. So how we look at it is the three things are important: people, partnership, and technology to make it viable in India. So we are hiring the best experts as far as people are concerned. We are looking at partnerships and alliances both for upstream operator and along with even for sharing of resources per se within India. If we have to share resources with other operators, that also helps. And technology in any sense always plays an important role in creating the efficiency for the operations. So this is how our approach is. And I would like to conclude by saying that India possesses tremendous opportunity in terms of offshore businesses. So our oil minister, Mr. Puri, had said that in the next 5 to 6 years, almost close to $100 billion is what of investments are expected, and I believe that is very much true in the Indian context. In terms of if this happens, it needs to be managed effectively, and it can allow the nation's growth.
Thank you very much. And I'd also please like to welcome to the stage Sushma Rawat, the Director Exploration at ONGC. Thank you for joining us, Sushma. If I may just direct one question to you. How does ONGC see the landscape in India now for upstream operations?
Namaskar and a very good afternoon to everyone present here. Talking about E&P and for that matter exploration, I think the bulk of the exploration is actually being done by ONGC and has been done traditionally by ONGC. So we have been in this area for more than 68 years now, exploring, and as you all might be aware, without quoting the number of what the sedimentary basin area is, we have only appraised about 11% of that total area. We have a target of doing 5 lakh square kilometers. We are halfway through, and with the OLP9 and then the 10th round coming in, I think we'll be in a pretty comfortable position. Exploration for us, like initially when we started, other than one basin which was known to have commercial oil and gas, we have been able to establish, and it is imperative for us to keep on discovering and actually commercializing each and every basin we have. Now that focus for exploration, it comes from the in-depth analysis of the potentiality in terms of oil and gas for each of these acreages or basins. And again, mentioning so many plays that have been established, and we have been trying to probe and discover new oil and gas. I think there is a still huge number of plays which we have not penetrated at all. So ONGC's focus, I would say it's been pretty aggressive right through, and we have been trying to open up other than category 1 basins where we are trying to go deeper. Because we know there are known petroleum systems, established petroleum systems, the shallower reservoirs and plays have been exploited over the past 50 years. So we have been trying to go into the category 2 basins. And as of now, I think almost all the category 2 basins, right from the west, that is Kutch, Saurashtra, then Mahanadi, and Bengal as well as Andaman, they all have proven oil and gas. Coming to category 3, we have Bengal and others which we have established. We are trying to bring them up. But for us, again, the focus for exploration is very, very upbeat. And it is not only trying to drill more wells, but also trying to make an estimation of how much hydrocarbons there could be. And I know exploration, the culmination of exploration actually comes through production, through the commercial returns, the economic returns that we get on the investments that are made in the initial exploration stage. So for that, we have been able to bring 2 basins onto the FDP level, and we are pushing forward for that. And as of now, I think might be ONGC would be one of the operators who is drilling in maximum number of category 3 basins. If I am correct, we are drilling wells in around 5 of these category 3 basins. So we are pretty upbeat about it. And we still believe that oil and gas for India, looking at the demand, the consumer base which we have in India, I also consider oil and gas discovery to be of strategic importance to India. We talk a lot about storage and all. Yes, we can, keep on importing oil and gas as long as it's economically viable, but we also need to keep on establishing oil and gas reserves within the country. So we are very, very aggressive about it still. And we have been going in almost all the areas. We have been bidding very aggressively. We got 18 of the 25 in blocks in the OLP 9. And again, for the mega round, we have bid in most of the blocks.
Thank you very much, Sushma, for that detailed reply, and very interesting how ONGC is growing and maintaining production in India. If I could now please ask Pankaj Kalra from Essar, whose Essar, as you might not be aware, in India, they specialize in coal bed methane, so an unconventional resource, but they also have exploration acreage in Vietnam. So my question to Pankaj is, despite the growth in E&P, many developing economies face market entry barriers, such as financing risks and infrastructure gaps. What are the biggest challenges that Essar Oil and Gas encounters, and how are you navigating them? Thank you.
Good afternoon. So you just touched upon Essar as a CBM company. We take immense level of pride in saying that we are a showcase investment case, not only for the country, but for the nation at large. And this is the reason why, we want to really have a lot of thrust on coal bed methane gas. We are not only the largest producer, but also one of the lowest cost producer in CBM space. Coming to your question, Amanda, finance remains a tricky question. And this is not true for any industry. It is agnostic to any industry. This remains very specific, not only to oil and gas, but one can say it transverses across different industries. In our case, it becomes slightly more unique. Reason being that we have a vagary of geological risk, in addition to the execution and other geopolitical risk, which I'm completely undermining for the discussion right now. But to put it simplistically, funding, financing can be done, and we have availed it. So as my global peers, Indian peers, all of them have availed it. And the way to navigate is you get the best of geological report from the likes of DeGolyer and McNaughton's or Gaffney clients. They establish the producibility, the lending is available within India from the state-run banks or globally through a bond, or now even a relatively much lower yield rates are there. So I think what we have found out clearly is that given the flexibility which the government of India has given in the last almost decade now on both marketing and pricing freedom, it has become more and more clearer for even the financiers and the investors to look at it in a very unique form. So I think that element of risk or uncertainty from that standpoint has been completely done away with.
Thank you very much. So we've heard now from operators in India, both from the private and the state sector. If I could now ask Ariel, please. Given BP is an international energy company, but IOCs, obviously, they need to develop new business models to remain profitable in challenging regions. Could you please give examples of what BP can and has done in this space?
Well, good afternoon, everyone. It's great to be here. It's my first conference. I'd like to congratulate everyone involved. It's been a good 2 days meeting with partners and stakeholders. It's a wonderful, wonderful event. I'd like to start with the reality that BP is global and works with global partners around the world. We believe it's important that we bring parties together and through a partnership grow the pie. Our approach is quite simple. We believe governments, countries, partners want to maximize economic recovery of resources. That's what we work very hard through the implementation of technology, cross-discipline integration, And we can do it in many different ways. Of course, it needs to be commercially viable and attractive in a global context, but we worked with partners around the world through technical services agreement, production sharing agreement. We've got partners in tax and royalty regimes, and we just agreed here at TSP with ONGC around Mumbai High, and they're all different. They all have input from stakeholders and are deep, deep partnerships for decades to come. So we believe with our partner here in Reliance, we've got a very good option set where we're keen to deploy our capability and our technology to work together to unlock resources of all kinds. Thankfully, we can do offshore, onshore, deep water, oil, gas, unconventional, and that allows us to help with a very rich data set to embrace lessons learned and to make sure that we're the most efficient in deploying the best technology to maximize recovery of resources.
Thank you very much, Ariel. Now, moving on to the services sector, I'd like to ask Martin, please, from Halliburton's point of view, what are the two top challenges from a service company's perspective in operating in India's upstream sector? And how do you believe India could improve the participation of international oil companies from a governance perspective?
Good afternoon. It's great to be back in India. This is my second conference. I think when we look at India specifically, we first of all see this as a great and growing market. We've been in India for over 50 years. And on a global perspective, it's not the most challenging country that we work in. There's a very stable government regime in India. There's a significant runway of work in India. And we've been here for many, many years. We have the right partnerships in place. We understand how the import-export systems work. We understand how the tax treaties work. So we're actually very, very comfortable working in India. I mean, if there was any challenges that I would say we face in India, it's things that I think can be simply resolved, such as, you know, the ability to move assets between contracts. You know, as a service company, you know, we live and die by how much we utilize our assets on a daily, weekly, monthly, yearly basis. And, you know, we are a little bit restricted here in India because equipment and tools stay with a contract. So in terms of efficiency, we have excess capacity because we cannot move equipment across contracts. So I think one of the challenges, and that we're working with ONGC on, is how do we make that more efficient? But I don't really see any other, you know, operating challenges here in India because I think we know the system very well. You know, so the second part of the system, I mean, what's imperative? How do you attract more international investment? I think to Ariel's point, we're in a globally competitive market for capital. You know, and capital will flow to where the returns are and where the value is, and that value may be, it's strategic, it's long-term, but we do compete for capital with other parts of the world, and that's a fact of life. And every day when we look at projects, we look at return on investment, we look at cash flow, and we make decisions on where to place capital. And I think that's imperative that the Indian government, ONGC, similar to what they're doing with the Oil Fields Act, the amendments in 2024, is in recognition of we have to be competitive on a global scale. India has to be competitive and attractive to global companies. And I think the Indian government recognizes that. I think the Indian government is working towards making India one of the most attractive places, certainly for a service company to work. Are there improvements that can be made? Always. But I think it's really positive and encouraging to see ONGC and the Indian government listening to the global community and asking how can we make India a better place to work, a more internationally friendly place to work. And I think those are all really good, positive steps.
Thank you very much. And I'd like to bring Rakesh in now, please, if I may. In light of the announced just yesterday by the Honourable Minister for Oil and Petroleum and Natural Gas, Hardeep Singh Puri, India is going to release another 25 exploration blocks. More than half of these are in deep water or ultra deep water, so that not only requires technologies, but also very deep pockets. Rakesh, what do you think are the policy and regulatory reforms required to increase oil and gas exploration in India, please?
Well, I think to intensify the exploration activities, the policy reforms have been a continued process in the Indian context. So, in previous few years, we have seen a lot of changes to the regulations. We have this bids which are in the category 3 basin have been awarded without any revenue sharing. There have been gas pricing reforms. There have been simplified contractual terms. Then there is the Oil Regulation Development Act, which has passed the upper house. It is expected to pass the Lok Sabha very soon. There we are talking about stable lease terms, petroleum leasing, then decriminalization the petroleum operations. So this is all the government is already doing a lot of things, but where additional probably it can add value or can further look at the issues are with respect to how do you give incentive for production, because current production from India is mostly from the matured basins. So how do you basically make sure that we maximize that production? Then on unconventional, probably there is no policy for the particularly the PSC era. So how do we basically create a policy for the existing blocks to explore unconventional? On the ease of doing business, I would say that there is a tremendous scope for single window clearances and streamlining the approvals and clearance processes. Then on the tax side, the GST has not yet been part of the oil and gas sector, upstream as well as downstream. So how to basically take a step forward on this direction. Then in taxes, again, there are different regimes in India where attract different kinds of taxes for the same lines. Like say, for example, royalty rates are different, cess rates are different. So how can we bring uniformity in these rates? So I think a lot of scope is still there in terms of the overall improvement process, but the journey has started, I would say.
That's very encouraging to hear that the journey has started. Pankaj, are there any specific policy changes or incentives that you would like to see to accelerate CBM and unconventional resource development in India?
I think the good part about CBM, unlike the other pre-NELP and other rounds, was that CBM, when it opened up, it was always on a revenue share basis. So the things are reasonably well clear. The mandate for us is to really increase production and contribute towards the entire growth journey. One of the key things that can be an enabler not only for us, but for the industry at large would be to bring in gas, particularly in the GST regime. That helps in reducing the input cost by at least 12 to 18%. So that's the set of variation that we're talking about. The second aspect is that just like the government of India has very clearly mandated some of the key sectors, particularly to work upon on production-linked incentives. You know, we still remain an import-dependent country, and one way to emphasize upon the production part is to really incentivize people to put in more monies. And I think one of the key things to put in more investments would be to have a multiplier impact not only for the country in terms of enhancing production, but also for the operator. So these two key things, besides the other progressive steps that the government of India over the last few years have taken, I think they are moving in the right direction. To his point, I think the journey has not only started, the journey has well begun. We just need to see that the momentum continues and we can move in this direction at a much faster pace.
Thank you very much. I could see, Sushma, you were nodding your head when Pankaj was speaking there. Is there anything you'd like to add to that, please?
Yeah, and especially when we talk about unconventionals, I think technology plays a very big part, as well as time efficiency in getting clearances and getting the project monetized. So I think for the NOCs it becomes a little bit longer and a little bit heavier to move through. So that is the areas where we are looking for improvement. Technology induction in terms of niche technologies. I think there has to be an approach. Why my unconventional remains uneconomical? So we really need to work upon that. There are a lot of tight oil and gas reservoirs, which most of the time we have been putting them in the contingent reserves. So I think as NOCs and even from the DGH side, there has to be a push in terms of policies to incentivize for these plays where we have made the discoveries and booked the reserves to actually bring it into production. And along with it, I think when we are looking at the blocks, it is high time that other than oil and gas, we start looking at the block in terms of an overall perception of every energy molecule that can be derived out of it. So again, it requires incentives, and like we were suggesting that, you know, even in category 1 basins, there are areas which have remained unappraised. There are ultra deep water areas where again the fiscals need to be changed, or for subbasalt, or for might be more than 4.5 kilometers where we can produce, there has to be a separate fiscal regime provided to the operators to, you know, actually make an attempt to bring out maximum oil and gas into production.
Thank you very much. And that segues very nicely into my next question for Anupam, please. Availability of finance has become a concern in view of ESG concerns. How has ONGC Videsh been able to manage its funding requirements, please?
Financing had been a big concern, say, 3 years back when everybody was talking about ESG, and many of the foreign banks had internal compliance framework where they were required to pass through certain checks that the projects they are financing, they should not be increasing the carbon footprint. So that was a big concern, and we have a loan portfolio of about $5 billion. Some of the loans were coming for refinance, as well as we are in acquisition mode. So for each acquisition also, and oil and gas is a very capital intensive business, so a lot of money was required. So we had very intensive interaction with the banks, and we explained to them that, you see, this is not on-off kind of thing. It will take time. And oil and gas business, if you do nothing, the production goes down by 5 to 6% per annum. So not doing anything is not an option. You have to continue to invest. And in any scenario we see, the oil and gas, even in 2050, I think we'll be consuming at least around 80 to 90 million barrels per day, as against 100 million barrel per day we are consuming. Only thing, the shape may be different. It may be used more for petchem and others. So that was one thing. Other problem we were also facing was from regulatory perspective, that being in India and our entire business was outside. So from FEMA perspective, whenever we do any transaction for international operations, there were a lot of regulatory requirements. Fortunately, during this time, the new International Financial Center at Gift City, Ahmedabad, that came up, and it offered a very good opportunity to have a base there as a global treasury center. So that is giving, that has taken care of a lot of regulatory burdens for us. And with all those engagement and also the changes which had happened and a lot of innovative things we did, during last 3 years, we were able to raise finance of about $3 billion at most competitive rates. That despite being in ESG, the concern we faced was never the financing was a problem, it was the rate. The banks had the problem to compete with the rate. So that was the situation we had. So, but that journey continues, and I think with the new administration coming in USA, there is a change in thought process also. There is a greater realization that we have to continue to support oil and gas, conventional energy, and also at the same time work on the new energy. So recently, what's an interaction we had with the banks, we have seen a lot of change in approach of the banks is there, and they are much more willing to finance oil and gas as compared to what they were doing earlier.
No, that's definitely very encouraging to hear. And I know in India as well, it's not just about exploration for new reserves, but it's also about trying to boost production from existing assets. Ariel, if I may, can you describe the new recovery as well as exploration techniques and use of digital and data analytics that you believe will drive the next wave of growth and boost production, please?
Sure. I talked about short-term, medium, and long-term planning. And for many of the assets we're in, we have a technology plan that sees through those lenses. And in many ways, we trial and test, but we apply the technical challenge to the landscape of technology for fit-for-purpose application. And examples include imaging below salt canopies in the Gulf of Mexico, images we could not resolve in the past. We take thick layers in the Mediterranean, the Messinian, and are able to now penetrate and get enough energy to the reservoirs. We work with partners and design supply chain of ocean bottom node surveys. And we just signed an agreement in the Caspian for a 5-year collaboration agreement to enhance image uplift in the producing ACG field. And so what we're coupling is the latest in imaging technology to give us confidence in developing deeper prospectivity to enhance and maintain oil production, gas production rates. We then plan through image, infill, and the ability to introduce energy into the reservoir to maximize recovery. And then we work on longer-term technologies to be able to process and maximize fidelity in a cost-competitive way. And so we make these big seismic bets that over time have allowed confidence in developments like the Paleogene 20,000 PSI reservoir that's deeper than anything we've ever developed. And so what we take is a technology, the problem we're trying to solve, we deploy the right people for that purpose, and then we tap into the learnings of industry. You know, going back to our unconventional landscape in onshore US, we reinvent what we do every 6 to 9 months. And we are landing wells in between 2 parent wells and are getting more recovery than the original parent wells through the application of technology and the latest in fluids and application of the fracs and the proppant. So these are things that we believe are key to unlock the next phase. It doesn't get easier. The easy oil and gas broadly is in good hands, I describe it. Now we need to take the harder barrels and put it in different hands to solve the challenges of tomorrow. So that's how I would describe technology coming together with problems and being delivered by the right people.
Thank you so much. And I'd like to ask a very similar question, please, to Martin. What efforts are underway in today's market in the digitalization space to improve production? And how is technology helping to increase efficiency and sustainability in the offshore exploration space?
Well, I think if you look at in the digital space, Res Optima, scalable Earth models, unified ensemble models, taking both static and dynamic data, real time, building those models to ensure that we have the best well placement, the best drainage of fields. I think that expands and the capabilities increase day by day. Digital twins have got more and more detailed and the resolution has become higher and higher. So I think we are modeling better than we've ever modeled before and seeing the results of that. I think when it comes to technology, I was actually in Dallas last week and we were talking about the first fully automated hydraulic fracturing job in the USA. You know, in November 2024, for the first time, well, actually step back a little bit. 75 years ago, LP Halliburton performed the first hydraulic frac on a well in the US. So for 75 years, human beings have operated pumps, have decided how much sand to pump, when to stop. In November 2024, for the first time, the machines took over. So that's the breakthrough in hydraulic fracturing technology for the first time in 75 years. So you look at that market, the efficiency that's been driven into that market through technology of unconventionals. And, you know, from there, we now go to machines talking to machines with fiber optics in wells. So as you are fracking one well, the machines on the other well are learning and adjusting fracture rates accordingly. So we're seeing technology in unconventionals driving amazing amounts of efficiency in the US. But outside of the fracturing world, technology, you know, Ariel just mentioned imaging. You know, we can see more than we've ever seen before. As we are drilling, we have ultra-deep resistivity tools that can see further than ever before. We can see ahead of the bit, we can see around the bit. We can automate, we can steer. So the technology is advancing, you know, rapidly in all spheres of life, and our business is no different. So as we move forward, as the challenges get harder, I think we as an industry have the capability and the willingness to solve those problems. And I think time and time again, when we've had to solve challenges, had to solve problems, this industry comes together and collaborates to solve those problems. So I don't think there's anything we've found yet that we cannot do. And I don't see why that would change going forward.
Thank you so much. And Rakesh, Cairn has led the technology adoption in India's upstream space. But in your view, what are the areas in which technology can play a role specifically within the Indian energy sector?
See, Cairn has always been kind of a technology-driven company. So in past, we have done the hydraulic fracturing in our tight oil and tight gas fields to develop them. Then we have built the largest EOR facilities for polymer flooding, which is an enhanced recovery technique. Then the longest pipeline has been built, which was a fully automatic heated pipeline from Rajasthan all the way to Gujarat coast, 700 kilometers pipeline we have built in the past, so which was all driven by technology. So in near term, what we are doing in present is, one is the CSCM technology, that is basically for offshore, where we basically are mapping the resistivity of the formations to reduce the risk of dry wells. So that is one which we are using in our deep water block. Then the other technology we are using is the tripod platforms, which is basically for small and marginal fields, which are plenty in terms of offshore businesses. So it comes at a much lower cost, so it helps us improve the project viability, and it comes at a much lesser time for its installation. So, and then we are, for our on-land fields, we are using this ASP technology, which is one level above the polymer flooding. So that we are doing in the Mangla, Bhagyam and Aishwarya fields, where we have started it in the cluster format to inject ASP and then improve the further recoveries from the fields.
Thank you so much. And Sushma, I saw you nodding again. Does ONGC have access to all the technologies you'd like to utilize?
Yes, I think we do have access. We are aware of so many technologies available, softwares and other for data collection and acquisition. I think when we look at the success rate for exploration in ONGC, it has been above average most of the time, the globally accepted norm. And that is because our risk mitigation measures are very much in place. So there is a lot of data integration of different sets, right from starting from remote sensing and geochemical survey, and geochemical prospecting done, as well as data integration. And I think one thing we can say about ONGC is, of course, the reserve replacement ratio is one aspect, but also indicative that wherever we have proven a field, we have been able to produce, and we do continue to produce it till time. Of course, talking about mature fields, most of the mature fields in terms of age have matured, but I think in terms of recoveries, we still have to reach that optimal levels of recovery, and with technologies getting better and better every day. I think the recoveries or the production that we can get from any kind of field, and of course again Vedanta is, I think, one example wherein we can produce from any kind of a field. So right from software as well as hardwares, and we are doing a lot of surveys in the offshore other than the seismic. We are also carrying out non-seismic in category 3 basins. And I think the teams within the ENP teams within ONGC, they are aware what is the latest globally. We do have service providers within India, but I think we do keep in touch with what is the best available anywhere in the world, and do try to incorporate and also inculcate the practice of adopting this. Along with it, of course, now there is so much talk of AI, ML, but I think it has been a part of the GNG process in terms of the data analytics right through for, I think, more than 2-3 decades now. So yes, we are there. We do have difficult and tough basins, I must say that, as compared to globally. And yes, but sustenance of production, even after so many years, I think it's an example itself that, technologies have been giving us fruits.
Thank you so much. I'd like to address the next question to Pankaj, but then to the wider panel as well. But Pankaj, firstly, please. What key factors do you believe will drive investor confidence in India's E&P sector, particularly for independent players like Essar Oil and Gas?
See, Indian geology, as been described, is still unharnessed. It is still untapped. As Madam mentioned, we have hardly harnessed 23 or 22 odd %. So there remains a completely, fully untold story which still needs to be captured. Towards that, I think a lot of discussion happened even when I was hearing the previous session. There is a lot of discussion and around what all AI and the mapping, the 3D seismic, the 4D seismic, what the gentleman here was mentioning about, on having the best of inputs from the ground without having the need for us to really ascertain anything. I think that plays a key role. So we have to imbibe the best of technology in order to make and give a confidence back to the investors. The investing community will always believe in a story where they can make returns. And for them to enable that, we need to give an equally convincing story that there is a reserve. The reserves are there which can be brought to the surface and they are monetizable. If we can put these three, and if we can set these three things together, I think monies would start to flow in. The other key aspect to be undertaken is all the open acreage OLP licenses that we have been, or the government of India has been issuing. If we can put in more data around that, more color around it, I think that will play a key role in terms of people to determine whether they would like to put, the exploration money also around that. So in my view, these are the two critical factors for us to really, untap or fully harness the India growth story on the oil and gas side.
Thank you so much. Would anybody else like to speak to that topic? We know India is obviously competing with a global upstream industry. Basins like Suriname, Guyana, and Namibia are energy exploration hotspots at the moment. Do you think India is in with a fighting chance?
See, I think definitely if you look at the past, in 1970 we had the Mumbai offshore discovery. And after that, at least in the offshore, we never had such a big discovery so far. So there is definitely enough opportunities, and we want the international companies to come have alliances or partnerships in whatever form they can to bring their technical know-how and invest over here, not only in financial terms, in technology terms as well. So it will provide a tremendous opportunity to these companies. What comfort they need, as Pankaj said, one is the return on investment, the other is the kind of assurances on terms of what if a dispute happens.
Fiscal reliefs.
So how do they make money out of it, and how do they take it back? So what kind of governance process they need to follow? So if there is clarity around all these aspects, a lot of investment opportunities are available in India.
Does this is open to anyone, does India's domestic gas pricing policy, does that have any impact on companies' willingness to explore and produce in the country?
Yeah, I think at the moment, India might be having one of the best gas prices that are available worldwide. We are almost, especially for the new gas, and some of the discoveries that have remained unmonetized was because there were gas discoveries, the gas prices were low, so the economic viability was not working out. But since last year, for the new gas, we are getting almost from $8 plus to $10, even $12. So that has made a big difference in terms of exploration as well, going for areas which are known to be more gas prone. And also the development of the marginal fields wherein we know it is going to be dominantly gas production. Of course, the shift towards green and, considering that gas is going to be the next, fuel, and a lot of LNG efforts coming up, in the years to come. Gas definitely makes sense, and especially for India. Even for the power sector, ONGC has a JV with the Tripura government, what we call the ONGC Tripura power corporation, wherein we are producing electricity from gas, and we are looking forward to replicating these kind of power plants in other parts of the country. So and of course with the EV, the talk of EVs going on, the electricity is going to be much in demand. So if we can replicate that, gas absolutely makes sense. And for us, with the gas prices that are being offered, I think in India, even exploring for gas or discovering gas is going to be very helpful to bring in the returns which any of the operators or the companies they put into these kind of plays where gas is to be discovered. We ourselves have been able to monetize even small discoveries like Hatta in the Vindhyans, which is from the Proterozoics, or small discoveries of Ashoknagar in Bengal after around 60 years of pursuance of exploration. And I think future discoveries and already discovered fields also we are in the process of monetizing.
Thank you very much. We've talked about the risks of exploration. Obviously, there's geological risk and technology risk, although technologies are fast catching up, and that is very encouraging. Another key risk on top of financing is geopolitical risks. Anupam, please. OVL is present in some projects that are affected by geopolitical risks. How does the company navigate these?
You see, when you are in oil and gas business, and especially across globe, presently we are present in 15 countries, 32 projects, and yes, some of the projects have been geopolitically impacted. Mainly our investment in Russia, where from I think more than 50% of production we are getting. So post 2022, there had been certain problems we have been facing with that. But you see, we are aware when you are in different countries, you will be exposed to geopolitical risk. We have been handling it through our portfolio approach. What we see when we are present in 32 projects, some of the projects will be facing certain risk, but other projects contribute better during that period. So this is the way we could navigate that situation. We have a very strong matrix when we enter any project in any country on the geopolitical part, but the situation is not stable always. It keeps on changing. So with that, if any project goes into geopolitical risk, our approach is to keep low during that period, try to preserve value. We believe that the situation improves over a period of time and the projects come back. So that is the approach we have been making, and we have been navigating that.
Thank you so much. And moving to Martin, if I may. How do you believe developing economies can balance their energy demands with sustainability commitments?
So I think, let's take India as an example. For every megawatt hour you produce with coal, it produces twice as much CO2 as gas. So I think, the best and the quickest way to reduce our CO2 emissions is move to transition fuels such as gas. And I think developing economies recognize that. And I think, as a conversation we've had today, that search for gas to replace coal is key. The need to explore and produce hydrocarbons efficiently, reliably, reduces their carbon footprint. And also, I think you also see countries like India investing heavily in renewables, along with hydrocarbons. So I think it's always going to be a balance, but there is no more effective molecule to produce energy from than gas today. And that will continue for the foreseeable future. But I think it runs hand in hand with renewables, with the phasing out of coal-fired power stations across the world. But I think the simple matter is, to allude to the earlier question is, why are we confident in places like India will continue to develop oil and gas? Because population is growing, and the only true correlation in life is as population grows, so does energy use. And therefore, India with a population that's targeted to, expected to hit 1.6 billion by 2030, there is no more guarantee than that we will need more energy, and we will need more of all types of energy. So I think, having the confidence around India and other parts of the world as for investment, etc., I think you just have to correlate population to energy use, and you'd be confident all day long.
Thank you so much. Yes, sustainability is definitely becoming a key consideration in the exploration and production arena. Pankaj, how do you think for CBM specifically, Essar is addressing this theme?
See, before I begin on the CBM, there are two very interesting analogies which I would like to bring on table. One, of course, is the growth which one has seen specifically in two countries, China and Australia. China used to produce about 4 million of CBM, gas per day. 4 million standard cubic meters of gas per day, just 7 years back. Today they are producing about 28 million. So 7-fold growth in 7 odd years. Australia, on the other hand, produces about 130 million standard cubic meters of gas per day from CBM alone. As against a stark contrast is India, which from all its resources produces about 85 to 90 million. So we still have a long way. Our geology of coal is no different than one sees in Australia or in the China subcontinent. The whole idea is that how do we monetize it? How do we make sure that we have more and more people, putting up for this opportunity of coal bed methane? Yes, it does have its own gestation time. Unlike a normal conventional or even a shale where you frack a well, you get instantaneous gas or oil. Here you dewater, you wait. The gas starts to break in after a couple of years. So there is a long gestation time. But once that gestation period is over, I think CBM story in itself is such rewarding. Excuse me. So what one is seeing is that over the life cycle, CBM in India in particular can actually become a mainstay. Today we are at 6%, and Prime Minister's vision is to make sure that we reach to 15% of the overall energy mix. We are confident at Essar that CBM can play a very pivotal role here. We are there well poised to increase our overall production journey from current 1 million to 5 million over the next 2 to 3 years. We have a very clear line of sight, a very firm plan in terms of drilling of wells. Today we stand at about 450 wells operating. Over the next 2.5, 3 years, we'll be at 750 wells. The plan is to drill more and more horizontal wells such that we can not only optimize the footprint of our wells, but more importantly, get to a better access area and see that the production can actually jump to a multi-fold increase over the next couple of years.
Thank you so much. Moving to Sri Anupam, please. What role do you see for national oil companies within developing countries to ensure energy security, please?
You see, in the developing world, what we are talking about, IOCs today are trying to prioritize where they will go for exploration and production. Here, due to the talk of energy transition, they are much more choosy. So the role of NOCs is increasingly becoming more and more important in developing countries to go for exploration and production. The kind of investment which is required for that kind of exploration, lot of risks are there. The private players are very choosy about the return part, and until they find the blocks are very, very promising, they will not like to put that much of money to the risk. It is the role of NOCs which they have to do a lot of exploration, and this is the role which ONGC is undertaking in this country. And we are present in many countries, so we know how the things are happening today, and NOCs have to take much bigger load today in the developing countries to improve the E&P landscape, explore more and more virgin basins, open new areas, and when the new discoveries are there, the private operators will also come in. So this is the role which we have to do. And because second thing is, more blocks are now coming in deep water and ultra deep water. And from our side, when we had been evaluating multiple blocks in abroad for acquisition, the major challenge we had been facing was relating to the cost of services. Cost of services, FPSO, etc. It has gone so high. Many of the blocks we are not able to see the value. So here NOCs again has to come up in terms of partnership with the IOCs and some other things so that the risk is distributed and they can enter into those blocks. Thank you.
Thank you very much. Martin, I was going to ask you a different question, but seeing as it's just been raised, the cost of services, is that something you're hit with continually by NOCs and IOCs?
It's a competitive market. I mean, I guess at the end of the day, we all want to maximize value. Our customers, ourselves. I think the conversation really is about the value created and how you show that. So I think, 30 years ago when I started my career in oilfield services, I think that conversation was very different from today. Today we have conversations about collaboration, we have conversations about total cost of ownership, and we have conversations about value. So while we understand the economics have to work, I think the vast majority of our customers today understand that economics need to work for us too. We have to make investments, we have to make returns. So we don't have that tradition, that conversation of 30 years ago where you must do this or else. That's not common in the marketplace today.
Thank you very much. I've just been told that our time is very, very nearly up. So very briefly, I would just like to thank the esteemed panel for coming here today, for sharing their thoughts. This hour has gone all too quickly, but I think the overwhelming theme seems to be that oil and gas and exploration is definitely surging ahead. To quote, "The journey continues, although it doesn't get any easier. It's the more difficult, the harder barrels that we will have to search for going forwards." But I'd like to just say thank you to the panel, thank you to the organisers and to the wonderful welcome I've had in Delhi and in India. And the journey continues to India Energy Week 2026. Thank you so much for your time.